It is my pleasure this afternoon. We're going to do Growing Your Agritourism Business with Succession and Exit Strategy in mind. And I would like to introduce the two ladies. Jenn Stewart is the First Lady nearest me. She is partner and head of rural, and she has extensive experience in advising owner-managed businesses and provides counsel to clients across multiple sectors. She was brought up on a family farm in the Borders. She's actually frae Lauder, and she is now involved in her husband's farming business in Fife, but she doesn't actually want to be known as a Fifer. She's a Border lass through and through. She is head of the Dundee office. Also, just past Jenn is Rosalind Catto, and she is the business advisory partner and head of the Inverness office, or Inversnecky to the locals. She heads up the hospitality and tourism sector of the firm, and she has considerable hands-on experience of working with clients in this sector. With these two ladies today, you couldn't find anyone better to relate to and to understand Scottish agritourism. So we're going to start with a case study, and so they found that it should be me. Oh, no, it's maybe not going to work, is it? No, back one. There we go. Case study. The bus stop. So I'll try and make this quick. Most of you have heard this before. So basically, this is how we start in 2016. So it's a single income farm. It's me on my own, just enjoying myself. That's my baby. I drive it. No one's allowed to drive that. That's mine. And then son comes home from the army, and he basically says, right, what are we going to do? So we do need a second income, and we come up with this idea of buses. So it's a long story. I won't go into it. We just decided we're going to do buses. So we had to get one bus, and this is the one that's always in the pictures, and this is our bus that sleeps 4 people. And of course, that doesn't work then, because you need a bus that sleeps 2 people as well. So we get another bus, it sleeps 2, and then you get the bigger family, and they want to come as well. So we have 3 luxury buses like this, all with power and mod cons and log fires and log-fired hot tubs, electricity. These have electricity. So at the same stage, of course, Junior turns around to me and says he's quite keen on glamorous camping, glamping. So he wants to have 6 more buses. And none of them have power. So they're called eco-buses. So that's us now with 9 buses, with people all staying in them. And then we had a kitchen bus as well, because we needed where the communal people would cook together. So we've got 10 buses. And then we wanted a bus for kids to play in, so we had a play bus as well. That's 11. And then finally, just to keep our hens happy, we got a bus, and we put hens in a bus as well. So we've got 12 buses. So now we've moved on nicely, and we've got our second income. We've actually got more than that. We're now up to 4 full-time staff. We're now up to 1 part-time staff. We've got 5 casual cleaners coming as well. So we've got our business going well. But then what do I do, or what do we go and do next? Because the buses are making far more money than the farm. So we decided that we'd go down a limited company avenue. I'm not saying this is right or wrong, and I'm standing up today, and later on, I might be proven wrong. And I don't mind being proven wrong, because at my age, I always make mistakes, so it's fine. But my son is the sole director, and that's how we see our business going forward, and it's got benefits, and it's got other things as well. And I just hope we've made the right decision. So I will find out shortly once Jenn and Rosalind have finished their speech. Okay, thank you.
Thank you, Balfour, and good afternoon, ladies and gentlemen. It's great to see so many familiar faces in the room and some new ones as well. So that was very insightful, Balfour, in terms of what you've done thus far with your business. And it might be that Rosalind and I pick up a couple of questions with you during the Q&A session to really look at why you went for the limited company structure and some of the reasoning behind that. So, today our remit is to talk about growing your agritourism with an exit and with succession in mind. So it's important to highlight the importance of getting your business structure right from the outset, ensuring the structure is flexible enough to adapt to the growth and the changes that may affect your business, whilst always keeping in mind what the end goal for the business is, particularly with regards to succession. So it's about getting your ducks in a row from the outset. I thought I would start by just giving you a little bit of background to Johnston Carmichael. So we are the largest independent firm of chartered accountants and business advisors in Scotland. We act for in excess of 16,000 clients, from sole traders up to large corporates, and deal with a lot of family businesses in our client base. We're very much a sector-focused organisation, and our teams all have enormous passion behind what they do and like to get underneath the skin of our clients' businesses and really understand and be part of their team, so that when essentially they're looking at any new opportunities, that they involve us from the outset. Quite often clients can come and tell us that they've basically started to progress an idea or a concept, and we think, oh, if you'd just spoken to us before, we might have been able to just give a bit of steer on some structure and planning around that. But like I say, we act for about 16,000 clients. A lot of those are in our rural sector, our food and drink sector, energy, infrastructure and sustainability, as we see people diversifying into renewables, solar, battery storage, carbon. And we heard from the panel this morning that sustainability is just, very high up on everybody's agendas. And we are trying to instill the culture of ESG, economic, social and corporate governance, into everybody's business and journey, and really help our clients on that path. So our wheel of services you'll see there basically cover off what we do, and we'll do the basics of business advisory, your year-end accounts and tax planning. We look at the tax side of things, and actually we're advising clients on their personal tax, their, all the different tax planning options that Rosalind will cover off a little more later. We're looking at corporate finance. If you have a new project and you need some financial modelling or fundraising, or you're looking to buy or sell your business, then again, it's an area where we have a specialist team that do this. We deal with a lot of management buyouts. So if you have a diversification opportunity, or you're looking to hive that off as part of your exit strategy, then actually we can help you essentially find the appropriate buyers to do so. The digital advisory side is very important as well, so that you're enhancing your bookkeeping, your reporting, your KPIs, your efficiencies. How can you make this all a lot better to look at actually what you're doing and get the reporting that you know that the diversified income you have is the right thing to do, or do you need to pivot your business again and evolve it and look at something else? So lots of different things that we can look to help you with there. I thought I would highlight the importance and again the passion for our involvement in the sector by just highlighting one of our clients that's a Scottish Agritourism member. Castle Craig Farm, owned by the Whiteford family since 1986, in the last 5 years has really diversified into the luxury holiday accommodation market. And they're on a journey with their diversification. I think we'll see a lot more to come. But our team at Johnston Carmichael were able to offer Castle Craig Farm a range of services, including specialist tax, construction and property incentives, so your capital allowances, and accounting and finance and wealth. So the importance of the wealth management side is really key, because actually One of the biggest hurdles and challenges that we will see with succession is that individuals don't have enough of a personal financial bank built up. They perhaps don't have a pension because they think that the farm and the land is their pension. So we actually have to look and advise as to how we can help clients be more proactive at addressing that. So again, we act for many diversified businesses, and a lot of clients in the room here today: farm shops, farm retail, wedding venues, distilleries, holiday accommodation, farm adventure parks, pick your own flowers, etc. So they say it's all about knowing your audience. So I would like to gauge just a little bit about those of you in the room and your business interests. So you'll see we've given you a new Slido code on the table, or up here, if you can scan it. I'll just give you a minute or so to work that out. Are we managing? Yeah. Okay. So I'm going to move on to the first question here. Do you currently have an agritourism business, or are you considering diversification? Excellent. So the majority already have diversified, and some are looking at it. Great. So, if you are considering diversification, what is your plan? Do you see that on your next? Who knows? Here for ideas, brilliant. Cafe, yep. Farm tours. I'm going to take a photo of these answers. Okay. Holiday parks, ecotourism, yep. Inspired by Comedy Croft this morning. A dog park, yeah. Brilliant. There's some great ideas coming up here. Farm tours, holiday lets, renewables, wedding venues, selling our prize, a top secret, like it. To develop a number of initiatives to support our new lifestyle. Workshop, studio space. Brilliant. Some really good cycle trails. Good. Yeah, some excellent ideas. Still coming in, using the captive audience we already have. Brilliant, using your geography, your assets. Yep. Great. Oh, I've got 2 participants typing. Let's see what these ideas are. Glamping. Yeah, again, farm tours. Bringing the public to the countryside, helping educate everybody. That's a good concept. Already. Looking to adding accommodation, events, barn round are already developing farm diversifications. Excellent, using the assets. So it looks like farm tours are definitely, I guess, the most popular one at the moment, followed closely by accommodation. So, I think I've skipped one, have I? Okay, so do you have a succession plan in place? I'm going to see if this moves a bit. It's moving. Okay, so we can see from the trend here that there are certainly a number in the room that still haven't got that succession plan in place. And we'll touch on that, obviously, as we're going through our session this afternoon. But that's something that can be within some of you in the room's control. Others will obviously be struggling with different hurdles and challenges, and it's how can we overcome those challenges because of the importance of actually considering that when you're essentially diversifying and setting up a business is so important that whenever you're starting out and setting up a new diversified entity, you should always have in mind, what is that exit plan? What is my succession plan? Very similar themed question, but do you have an exit plan if you don't have a succession plan? And it was great to hear from both Lara and Andrew earlier that they are considering what that plan is in terms of Andrew mentioning an employee ownership trust, making use of the community and employees around, and Lara having already addressed that with her family. So again, really mirroring our succession answer. So, entrepreneurs, that is you lot. You're all entrepreneurs already in what you do, and it's important that you have this mindset when thinking about diversifying, starting, growing, scaling your business. You need to ask yourself these questions. Do you have the competencies and commitment to keep on delivering them? So there are significant overlaps between the practical and the accounting aspects that you need to think about when diversifying your business. And I'm going to cover some of the more practical aspects. Rosalind is going to touch on some of the accounting aspects shortly. So why do you need to diversify your business? Do you need to diversify your income streams? Agriculture is challenging at the moment, and with the new Agriculture and Communities Bill that is out, but obviously we're still waiting on a lot of further guidance coming from the secondary legislation that follows that. We are needing to change the way we do things and the way that we are looking to bring in income with more of a lean towards the environmental schemes. We're also, have been heavily reliant on the public funding, but are there other avenues to consider in terms of looking at private funding? What options are actually out there and available? Is it the family that are looking to get involved in the business or exit the business that is causing you to consider the diversification? Is it that you've got the ideal geography? But do you have the skill set? Are there the transferable skills within your teams to basically get them doing any diversified opportunities, or do you have to train them? Is it circular? Is it sustainable? We are all on the net zero journey, and how can you make your business attractive so that consumers will want to have your product or services as we move forward? Do you value your own time? Could somebody else do this cheaper, that you've got the concept, the idea, and the business, but could you be employing somebody else to actually do the work for you? We often ask this challenging question to our clients, and they say, oh, well, I just get on with it. But you think, well, what else could you be doing if you weren't doing that? So it could be cleaning, it could be marketing, it could be any services that you need. So you really need to challenge yourself. You need to do a SWOT analysis and look at what the strengths, weaknesses, and opportunities and threats are of this diversified opportunity. Can you fund the project? Will the bank fund it? The bankers are all looking now towards more of the green lending criteria, which brings in the net zero and sustainability avenues. Will you be dealing with the public? Have you got the structure of your business right? Have you considered limited liability and basically your PI insurance? Do you have a will? Do you have a power of attorney? Does that all reflect what's in the balance sheet? Have you considered and have you taken advice in that regard? So when thinking of diversification and starting up a new venture, always think about what that exit plan is. This will allow you to get the legal and the financial structure correct from the outset. These models can be built with flexibility, but always good to have some horizon thinking and planning at the outset. Have you tested the market? Look at what Lara has done with the Orkney dairy and now having lactose milk that is basically going to be fit for purpose. Do your market research before you go down any ideas and concepts. Do a business plan. Is it actually viable? Once you've read the business plan yourself, you might think, actually, this is a no-go. I need to think about something else. Get that legal structure, financial structure right. Look at how you can then scale up the business you perhaps already have, but again, at the same time thinking, well, where's the succession and exit in there? So I am now going to pass over to Rosalind. Thank you.
So good afternoon all. As Balfour said, I'm Rosalind Catto and based up in the Inverness office and head up hospitality and tourism for the firm, but having been brought up in the Black Isle, surrounded by farms and spending my childhood in marts, feeding the calves and so on, I'm very much part of the farming community, still up there, and have quite a number of farming clients as well as hospitality clients, which is why Jenn thought having me along here might be useful today. So thank you, Jenn, for covering off the more practical aspects of diversification. We can't have a firm of accountants here without talking about the accounting and the tax aspects of diversification, and I thought I would just touch on a few of them. And for every business is different, and the structure that you have for your business will depend on how you're set up. It's really looking at your long-term goals, being succession and exit. Having a structure in place that allows for growth and for change is key. It's whether your business, you're looking to grow for funding, perhaps mitigating and managing tax, or inheritance tax planning and estate planning. I'm sure you're all aware of the various structures, whether it be sole trader, partnership, if there's a concern over a limited liability, perhaps a limited liability partnership, a company, there's trusts, and also a variety of them all, a hybrid of all of them. So it might be that you have a traditional farming partnership, you've diversified, and all of the trading activities go within the partnership. At the minute, it's just mum and dad. Profits are split equally between the two, but the next generation are coming into the business. Is now the time to look into bringing in that next generation? It might be that they don't come in an equal partnership at the moment, but they come in at 5% and they grow as they grow with the business. Another option, you've diversified the farm and splitting out that diversified business into perhaps a company, again from limited liability. Maybe you've got succession in mind, maybe you're going to build up this business and sell off, so you're maintaining the existing agricultural business within the traditional farming partnership, and your diversified businesses are kept separately within a company. So quite often, as I'm sure Lara and Andrew will know, that when you diversify a business, capital expenditure, there's always a time for capital expenditure. And really, from my experience of working with clients over the years, it can be quite a smooth process claiming capital allowances, or it could be exactly the other way, depending on how organised you are and how much you speak to your advisors. So unlike repairs and renewals, which I'm sure you know, you can claim as an expense through your profit and loss account and get immediate tax relief. With capital expenditure, it goes onto your balance sheet, and to be able to claim back tax relief on that is via capital allowances and structural buildings allowance. Now, I thought I'd share two examples, one positive and one not so positive or smooth running. So one of them, farming client of mine, wanted to build a huge storage shed. He speaks to us all the time. He's always telling us what his plans are. I put him in touch with our construction property incentives team so he could discuss the plans with them. He equally was happy for them to contact the builder and the contractor. So they highlighted to the builder what was required on their invoices, whether it's telling what element is plant and machinery, what element is building, because you get different allowances depending on what it is that's being built. And with the new legislation for structures and buildings allowances, you can no longer just have an estimate of a percentage of the build that relates to the buildings and what relates to plant and machinery. So it's really key that the information on those invoices you get from your builder is descriptive. They also took pictures throughout the process, which really helps. They have electric roller doors, and they're part of that plant and machinery you can get capital allowances on. On the other hand, I have a hotel client that I didn't know that they'd done a refurbishment over their quiet period. They hand their records in at the end of the year, and lo and behold, lots of capital expenditure by various tradesmen, some of which went bathroom refit. We had no idea what any of this refit or what made up the refit, which made it really difficult for our capital allowances team to identify the maximum capital allowances that they could claim. And quite often, once you've paid your builder or your joiner, they've moved on to the next job, and trying to go back to them to ask for more information can be quite difficult. So I would just recommend, if you are looking to invest and to build, is speak to your advisors and find out what information you need so that the builders know up front. So key performance indicators, when you have a business with lots of different trades, it's really key to have a robust bookkeeping system, one that allows you to record the income and expenditures from each of your individual trades. Do you know what for example, in your holiday pods, your room occupancy? Do you know the average room rate? For food for your cafes, do you know how much you're making on that pan of soup? How much can you spend on your ingredients and how much do you have to sell it for? It's just as basic as that, but costs are changing all the time, and something that might have been profitable a few months ago might not be so profitable now, and being able to report on that is really key. It lets you know if each individual trade can stand on its own 2 feet, or if it's been all reported together, perhaps you don't know which area is profitable and which isn't. With succession and exit in mind as well, the first thing, if you want to know what the value of your business is and you go to a corporate finance team, they'll want to know your numbers and not just the last set of accounts. Having up-to-date information is really key, as is if you're going to your agent for selling your business, they will also want to know that up-to-date information. This is just a quick, not a VAT expert, just be mindful. If you're separating businesses and, for example, you have a farm shop in a separate entity, just be careful. HMRC sometimes see these as artificial separation if you've got the same staff, you're using the same funds and so on. So just be careful if one business isn't VAT registered and the other is. It's just having a plan in place, knowing why you've separated. If it's a strategic decision and it's for succession, it's for limited liability, HMRC are more likely to accept that this is a proper separation of business and it's not an artificial separation. And then tax. We can't have a slide without tax. Now, I hold my hands up. I am not one of the tax advisory team in the firm. If anybody has any really technical questions at the end, please come and see me, and I can certainly ask our tax advisory team. But when looking at succession and exit, there are a number of really valuable reliefs available, and planning for these is quite key because some of them are time critical. So business asset disposal relief. It used to be called Entrepreneurs Relief, but decided to change it to keep us on our toes. So this is a valuable asset if selling a business reduces your capital gains tax to 10%, up to £1 million of lifetime gifting. There are conditions. You have to be a sole trader or partner in a business and have had to have been running that business and owning that business for the previous 2 years. For furnished holiday lets, this is a really it's an excellent relief for them. They are deemed as trading for this relief, whereas normal residential property disposals can be taxed up to 28%. Business property relief, agricultural property relief, this is for inheritance tax. So this is available, relief available, and it will reduce the value of your business asset by as much as 100% and sometimes 50%. Depending on what the asset is. And this can be valuable for lifetime gifting as well as gifting on death. So again, something to consider, and again, a time frame is that you have to have held the asset for 2 years prior to death, and if you gift it on, it has to be in the hands of the person you've gifted it to for full relief up to 7 years. There's also capital gains tax implications of this, of which there are reliefs available. But again, the tax advisors, can you speak to your team? So ownership, depending on your business, everybody's assets are in a different place. It might be a historic thing. It might be that you have all your assets and all your trades under one partnership. And this, from a reporting point of view, from a tax point of view, is cost effective. You've only one set of accounts to prepare, one tax return to prepare, but perhaps it's not the most tax efficient. So where I said that furnished holiday lets have the benefit of business asset disposal relief, they're not deemed as trading for inheritance tax relief. And it's wholly or mainly for inheritance tax relief. So if part of your business is deemed as non-trading, which furnished holiday let is, so this doesn't tarnish the whole trading status perhaps of your farming business, maybe it's better to get that out and get it into a separate company to have your trading assets and your investment assets in different, I suppose, tax efficient silos. So finally, income tax, and how you pay your income tax will purely depend on what structure it's in. If you're a partnership or a sole trader, you'll be taxed on all your profits, regardless of how much drawings you take out of it. Whereas a company, there are various ways to take funds out of a company, be it a director's salary, a pension, dividends. And really it depends on what you need on a day-to-day basis. that we always get asked the question, is it still appropriate to be a sole trader or partnership? Now is it now the time to incorporate? And each structure has its pros and cons, and suits sometimes a partnership suits a family better than others. And it's not always about the tax that's payable. Whilst the draw of a company to pay lower taxes has previously been a large factor in decision making, the gap in the tax is slowly decreasing. So ask yourself, what are the long-term goals of your business? Do you need to access all your profits that the business makes? Would a company perhaps restrict the flexibility of your business? And what are the wider commercial implications of each route? That's me.
Oh, here's a pair of glasses here. I could give these a wee shot. Right. So, succession and exiting your business. Thought it was useful before we basically get into the Q&A session to just give you a little bit of a recap on succession. So, succession, well, when is the right time? Is it when there's been a life event, a death, a marriage, a divorce, old age, children finishing education and coming home, a diversification project? Put yourself in your parents' and your grandparents' shoes. What might they be thinking? May they be fearful that what's their purpose anymore if they retire and hand all the assets over? Can they actually afford to do that? Do they have that pension pot built up that allows them to essentially retire and step back? I was at a conference down in London and somebody suggested we potentially should have the equivalent of young farmers for retired farmers, so that there is a group where people can actually network and still go out and meet, because there can be that fear of social exclusion basically because you're no longer as involved as you previously perhaps were. Have open discussions with the family. Communication's key. Don't have a level of expectation that you're entitled to this and you should just be given this. Actually prove that you are able to take a business forward and show some business plans, show that you've done some research as to what an opportunity may look like. Bite-sized steps often is the way forward. Sometimes you might have to involve a mediator that would essentially sit round the table and have a discussion with you. There are quite a few people here at the conference today that specialise in this area and would be delighted to get involved in helping with that. Use the tax reliefs and exemptions to achieve your succession goals and, where possible, improve overall tax efficiency. But tax is part of the jigsaw. It's not there to essentially drive all of the decisions. And it also shouldn't be used as a barrier that people say, well, we're not going to address this succession issue because the tax issue is just too big a challenge. Where does the land sit on the balance sheet? There often can be confusion as to what's in a will and what's on the balance sheet, and they have to marry up. There often can be the issues of legal rights if there are other siblings that are not involved potentially in the family business. So do they have a legal rights claim? Can that be mitigated? Could other siblings be given other assets? So could you actually be considering key man policies where there is insurance policies that can actually be paid out to other siblings that may form part of that succession solution? Getting the next generation involved and having a bit of skin in the game is quite an important thing for the progression of your business. Rosalind and I are both partners in Johnston Carmichael, and we are both invested in the business, so we're passionate about driving that forward. We have to address our succession and who we're bringing on and the teams behind us to make sure that they're passionate and diversifying the services that we also provide. You've got to look at the tax implications. You've got to look at your capital gains, your IHT, your holdover relief, who owns the land, know the tax rates, protect the assets. You've also got to look at all the commercial implications, clear idea, what are the aims and objectives, when to potentially sell, what is your structure, do you have to report to shareholders, could you hive off the business and sell it on and then keep the traditional farming element. The majority of farming businesses, certainly in the Agritourism membership, there is a farming element to that, and then there's a diversified entity. Can that stand alone? Is the structure right to be able to do that? So there's lots of things to think about, and we've noted quite a few of these down on the slides. We'll share the slides, but I'm quite keen that we get a bit of conversation going in the session, so I'm not going to chat through too much more. I think the important point to highlight in here as well, though, is, in terms of looking at your agreements, if you are a traditional partnership, do you have a partnership agreement? Is that written? Is that verbal? What does that say? If you have a limited company, have you got a shareholders agreement? Are there different options within your shareholding to allow flexibility in terms of the different structures that you could be looking at, again, when you're trying to address that succession planning? So lots of little seeds to think about there. And another takeaway definitely is to consider your wealth management side. Have you got a financial advisor? Have you got a will? Plug for the lawyers in the room. Have you got a power of attorney? If not, these are really important things that you should actually have in place. So again, just wanted to make the point that make sure that your professional advisors, your agricultural consultants, your land agents, your lawyers, your accountants, your bankers are all part of your team. As you consider you're scaling up the entities you already have, or you're looking at the exit, bring your advisors into the discussion so they can help keep you on the right path, and basically give you some proactive solutions to maybe what you're actually trying to do. So I'm going to hand back to Balfour now to facilitate the Q&A session. It's great to see already that some of the questions have been firing in. So over to you, Balfour.
Thank you. If anyone would like, we've got a roving mic if you really want to put your hand up in the air and be counted. If not, we do have a few questions here. So would anyone like to be heard? Or do you just want to wait a minute? One question we have got, which is, what steps would you suggest to encourage the older generation to start to discuss succession where at present they are reluctant to do so? I think Jenn has answered that one. And there are mediators that you can get. You can get people who will come and sit in the middle and try and chat to you. And Caroline's always been very famous for her I been speech. And when people like me get told, you can't just continue being I been, then occasionally it works through into the brain. So I think that question's answered, if that's okay. Anyone else want to say something? Time is running out, mind you. No, we're okay, we've got time. Right, we've got another question then. And I don't know this one at all. At what age can we bring children into partnerships and limited companies? Is that your, Jenn?
So my view on that is that you could, in theory, bring children into partnerships or limited companies under the age of 18. I would, however, highlight that this happens very rarely. And there's a huge risk in doing so, because when you become a director of a limited company, you have fiduciary duties that you have to comply with. And actually, is that child essentially responsible enough to make decisions to drive forward and be responsible for a business? Similarly, for partnerships, it may be that it's from a sort of a profit share aspect that they're included, but there are huge risks around that in terms of actually the responsibility that is then put on that child's shoulders. Do you have anything to add?
No, I agree.
I agree. That'll do. Here's another question. How do you handle a situation where two adult children are heavily involved and one is not? What's the starting point for getting a fair result? That's a tricky one.
Well, I would add in here, and I'll let Rosalind answer the last part, but when you're looking at succession, fair and equal are not the same two things. And ultimately, you've got to essentially try and work out the plan of what is going to happen, and then come to a reasonable agreement in terms of how you can do that. And that's sometimes by having the life insurance policies, the pension, any other property or assets that potentially could be given to the sibling that is not involved. and the one that is involved essentially sometimes can carry forward the business, any debt that's associated with it. So yeah, fair and equal are not the same thing.
Yeah, absolutely. We have a number, it's ongoing, of families that someone is, last week we had somebody in that, they run the business for the parents and the sisters don't. And it is the cash and the pension, they will be left to the siblings that aren't involved in the business. But yeah, fair and equal is not always the same. And I think traditionally, sometimes in the farming partnerships or the farming businesses, it can be the eldest, and I know that can cause issues. But I think it's speaking, it's the family speaking to each other. That particular family actually had a meeting with all the 4 children in the week before to discuss all of this and to air their issues. And I think having that in advance and encouraging them to do so makes a big difference, because it's the fighting afterwards that's never pleasant. So communication is key, I would say.
Could we have a roving mic, please? Please, could you just stand up and give your name and...
Hello, my name's Tim from Tasmania. So,
Hi.
Just an observation from the lady that spoke about, you made a quick comment about having a bank manager on your team. And from our experience, it's a long, lonely road when you regard your bank manager as an enemy or a foe. And we wouldn't be where we are in our business without very, very much so having our bank manager as part of our team. And when we went to that particular bank, he said to us that he wanted to be on our team because he admired our vision and wanted us to help us get there. So bank manager and accountant on your team can only be a good thing, and from our experience it is.
Thank you. Anyone else? Yeah, one at the back again, please.
Be kind, Linda.
I'm going to be very kind. Linda Tinson, Burness Paul Solicitors. I was just thinking about you saying when is the good time to start succession planning, and it's as soon as anyone can understand English. It should be, you're talking about facilitating meetings and having those sit downs around the table, but it should never become a surprise to anyone in the room if it's talked about throughout the whole lifetime of that business. Succession has to be, and exit, front and foremost in everyone's conversations, I think. Do you agree?
Absolutely. Absolutely. Yeah. And I think you can tell, we quite often will have clients that, actually I can think of a scenario at the moment where it's a dairy business, they have diversified into dairy products, but the family are not interested in coming home at all, and have been encouraged throughout the life, and they've basically been evolving their succession plan as they go. So I think the other thing is, don't all be scared to think that you might put a plan in place today that you can't change. So that can actually evolve as you go and as you see what the interests potentially are of children growing up, or actually changing their interests at all. So you can pivot that.
Any other questions? Oh. Mrs. Miller. Hi, boss.
Hi, Balfour.
Hi.
My point I just want to make is around, I'm working with some fantastic people who are not the child that has shown the interest in the family business at the moment. They're the people who are not working on the farm. They're not the people that are at home. And they're expressing an interest to me that they want to go home and develop agritourism or develop in the farming business. And they, so I guess my point is, sometimes parents, you hear parents making up their mind, wee Johnny's not interested, he's 8, doesn't seem to be showing much interest. But, my point is about the child that doesn't look like they're interested, who might be interested at 30 and don't know how to have the conversation that they too want to come home. And so I guess that's my point, but any your input to that would be welcome.
Thanks, Caroline. I think the key thing here is communication. And it's actually about having that open-ended conversations with the family and how you can involve that. Again, it looks at, well, what's the structure of the business and how could that actually come in? Is there an area that sibling essentially could look at? I think the other thing that we often see are the challenges where the siblings that have been involved in the business have basically driven the business, added considerable value to the business, and then somebody that hasn't been involved wants to come back in to take essentially a share of that pie. So that's where you really have to be looking at valuations. You need to be understanding how essentially that could be made possible. But I think the key to that really is it's about communication and everybody speaking and seeing how this actually could potentially work.
Anyone else? We've got one other question here. Is it possible to convert from general partnership to limited liability? Wondering if this could protect next generation from the liability of past decisions. Is that an outro?
No, well, there's a lot of different angles you can take to that. I would say my background is I'm a licensed insolvency practitioner. So used to dealing with essentially, complex situations like that. So it's all about, yes, everything is essentially possible. However, somebody is going to be liable for the decisions that have been made previously. So you could set up a new structure, but if there are decisions that have been made in the past that has resulted in debt, essentially, then somebody will be on the hook for that. Now, in a partnership, the partners are joint and severally liable, and therefore will have to actually deal with that situation. If you have a new limited structure, that obviously does not kind of fall into the limited structure unless you've had a conversation with the bank in terms of actually how you might roll debt forward and look at the different asset banks. So happy to chat to anybody that actually raised the question, and we can take that further if helpful. We're getting from Sarah.
Is it moving on? We're okay. We've got 5 minutes, so we've still got time if anyone would like to say anything else, or we're going to take a question from Slido. It's quite difficult, actually. There's lots of questions coming on. We'll try this one. Here we go. We are currently employees of our family farming business. Are there any downsides to becoming a partner, such as being able to apply for a personal mortgage?
Yes, if you're new into there's not downsides. It's just if you're new into a new partnership, you'll need generally. I think banks now will ask for a couple of years of what they call SA 302 statements, which is just proof of your tax return. I think what was key to our friends from that were speaking earlier is that having a relationship with the bank manager is quite key as well. And if you've got the historic employment, and they may well ask for the partnership accounts if you're coming into that to show that there's the partnership's in a reasonable financial situation, that they will be able to pay you out. And it could be that you're on base drawings, like a basic salary and a drawings, and it's not profit share when you first go into a partnership. That's another way of doing it. And certainly you see that in the professional sector quite often, that you don't initially get a share of the profits, but you become a salaried partner, and that could be a stepping stone into becoming a profit sharing partner, and might help with bank funding from a mortgage point of view.
Okay. No other questions? Not one, Frida. Roving mic. Rove. We'll make this the last question.
Frida Scott Park, Port Nellon. I'd like to ask a slightly sort of ironic question. What is a bank manager? It seems to me they're really difficult to meet. I mean, we happen to be a business that's in profit, I suppose. It seems to me they're interested in meeting you when you're in debt, but we would really like advice as to what to do with our money. And I would love to know how you meet your bank manager.
Well, I would say, do we have any bank managers in the room? Because I think that is definitely a question that we probably would defer to the bank managers, and we will perhaps not comment on that one.
Okay, well, I think time has moved on. I'd like to thank the two ladies for giving up their time today, and especially as they are the gold sponsor for the whole conference, so it's very kind of them to give up their time. So if you could thank them.